Thank you for your interest in tax-deferred exchanges. This particular produced video is about a topic called related parties in tax-deferred exchanges. Well, hold on to your hats. This is going to be a very complicated video. The area is complicated in practice, and it is intended to give you an overview, but we would highly suggest that if you encounter a related party situation, that you certainly contact our office, talk with our staff in order to get a good opinion as to your particular transaction. This video will not replace our analysis in a related party transaction because of the complications and intricacies associated with this area of practice. We highly encourage that you talk with one of our staff members regarding your particular situation. What are related parties? What is occurring here, folks, is we have some pretty devious taxpayers out there in the marketplace. And as the Congress comes up with tax laws, smart people come up with ways of dodging those tax laws and utilizing such things as tax-deferred exchanges in a fashion that allows them to take advantage of the system. And that's what's happening here. Imagine, if you will, that we had a party that owned a low-basis property and wanted to exchange a property for another property with another exchanger that had high-basis property. And let's imagine that they were family members encouraged to do this particular type of transaction. It would allow a party to do a tax-deferred exchange and avoid the overall capital gains tax. But the manner and method of doing it is not one that has a real business purpose. It's merely a family member exchanging one property for another. This is the essence of related party transactions. This is the reason behind the prohibition against related party transactions, but we have to understand that not all related party transactions are prohibited. This is where it gets to be a bit more complicated. So the first thing that happens is that you as a client are contacting me as a qualified intermediary and asking the question, I'm buying a property from a relative, I'm selling the property to a relative, I'm buying the property from a company or an organization to which I have at least a 50% ownership interest. I'm selling a property that I have at least a 50% ownership interest in a corporation or an LLC or an entity or a trust of that sort. Whenever these types of fact patterns come up, we highly suggest that you contact our office and allow us to analyze the transaction and see if it is going to fly from a related party transaction standpoint. It may be able to fly because there's two manners and methods of handling related party transactions. The first is if it can be shown that the transaction will result in a disproportionate payment of taxes by the parties involved, the related party transaction will not fly. And we will be able to analyze the transaction and give you that particular type of answer. If it won't fly, you will know that it won't fly. If it won't fly, you'll know why it won't fly, and we'll have to proceed in another type of transaction. But what occurs more often is that we have a transaction with a family member, and the first question is, are they a related party? And of course, a family member who's a son or a daughter is a related party. A family member who's a father or a mother is a related party. A family member who's a wife or a husband is a related party. But cousins aren't. In-laws aren't. A lot of parties are not related parties when we start digging into the definition of related parties. So that's the first inquiry. We may be able to answer your inquiry since you're dealing with a cousin or an in-law. It doesn't even register as a related party transaction because these parties are not related parties. Then the question becomes, if they are related parties, what is occurring in the overall transaction? So if you are, for instance, selling a property to a related party, the first inquiry is that related party transaction what we call bona fide. Is it an arm's length transaction? Are you selling the property for the normal fair market value? And is that appropriate? And there's nothing inappropriate about selling the property for its fair market value to a relative. If you're selling the property for the same price to someone else out on the marketplace, if you're selling the property to a relative, of course, at half the value, that could cause some suspicion on the part of the Internal Revenue Service, particularly in the area of related parties. But to a great degree, if we're selling the property to a related party at fair market value and there's no special treatment being given to that party, that's a related party transaction that will pass muster. It will fly. We're able to complete the transaction with one caveat. That buyer, that relative of yours, has to agree to hold on to the property for at least 2 years. And if they don't, your transaction fails. Your tax-deferred exchange transaction fails retroactively back to the time period of the tax-deferred exchange. So this is pretty draconian. So keep in mind, we can complete a related party transaction in some instances, but we are always going to have a 2-year holding period in every transaction associated with it. So let's pretend that you are buying a property from a relative. Is that acceptable? Can be. Are we buying the property at its fair market value? Yes, we are. What is the tax ramifications for the relative? If the relative is paying their normal capital gains tax on that transaction, the Internal Revenue Service is happy as a clam, because whether you buy that property from that person or you buy that property from a third party, the third party or that person are all paying the taxes. The Internal Revenue Service is happy. Again, we have a related party transaction that passes muster, but we still have you having to hold on to that property for a 2-year time period. So if you're thinking about buying a property that you're going to be selling quickly, the related party transaction may not work. You may not be able to buy the property because it won't work for your intended purpose. In these instances, we also can apply this to organizations to which you own an interest. So if you're buying a property from a corporation and an LLC to which you have greater than a 50% ownership interest, the same group of rules apply. To the degree that we're doing a transaction where a related party is also doing a tax-deferred exchange, you might as well anticipate that the transaction will fail. It will be a related party transaction that will fail because another party is also completing a transaction that's precluding the government from getting their tax money. By now, you're probably scratching your head. By now, you're wondering whether or not you have any understanding whatsoever regarding related parties. Don't feel bad. This is why we highly suggest that if you listen to this video and you go through and the first inquiry is, am I completing a transaction with a related party? Now, what does that mean? Am I selling a property to a related party? Am I buying a property from a related party? If the answer is yes, who is the related party? If the related party is a close relative, then we're going to have to analyze the transaction from a related party transaction. If the related party is not a close relative, is a cousin or an in-law or something of that sort, then we don't have to concern ourselves with related party transactions. Once we get through that door of being able to analyze the transaction, then we determine whether or not it qualifies. If it qualifies, then we're home free. If it doesn't qualify, at least you know where you stand. But if we're qualified, we're home free with one proviso. We must have a 2-year holding period. And the party to the 2-year holding period may very well be your relative. Because if your relative is buying the property from you and is planning on flipping the property or doing something else, your relative, by selling the property without your knowledge or permission, can retroactively cause your exchange to fail literally 2 years after the exchange happens. That can be pretty draconian and something that you don't want to have occur. This is a general video. It's not as specific as we'd like, but it does provide a basic understanding for you in the hope that you will contact our office We will get our facts together and we will provide you an opinion in this area as to whether or not your related party transaction will qualify. Thank you very kindly.